Well, it's time now for our special segment, Outlook 2025. How will Indian markets perform in the coming year, which is just about 8 days away? What are the growth headwinds? What will be the top stocks and sectors to look out for in 2025? To talk about all that, we have two special guests with us in the studio. Aditya Suresh, Managing Director, Head of India Research, and Sandeep Bhatia, Managing Director, Head of Equity India at Macquarie Capital, both of them. Sandeep and Aditya, thank you very much indeed for joining us.
Good morning.
Well, Sandeep, let me start with you. As your report says, the consumer has decided to take a nap, looks like, not much consumption. Very nice phrase. But what's the sense? You think it's bottoming out, and as the government spends and the Rabi harvest comes in, would it be buy time in 2025? Consumption stocks.
So consumption has been weak, and that's something which has been seen in earnings. I would think that consumption should slowly inch up. There's not going to be a quick rebound. That doesn't happen, especially for the broad swath of consumption that happens in India. But definitely, this means that the worst is behind us. Whether to buy the stocks, I would think we should wait for longer correction, both in the market and for consumer stocks specifically, before we buy them. But the worst of consumption probably is behind us, and it's a slow uptick.
It's not yet by the fear.
Yes.
Okay. Just to add to what Sandeep said, I think we think about consumer as three parts, right? The top end, I think the characterization is things are okay, but momentum is softening. I think middle category is where there is a problem, and I think that problem may kind of persist depending on kind of incomes and inflation. Rural, I think, is an area where I think we are seeing at least some green shoots, right? So things have been kind of soft. Company commentary speaking a bit more optimistically. The data as well is starting to improve a little bit. So I think, in those three categories, within this top end still looks relatively better place, but in there, momentum is softening. But a lot is already in expectations. That's, I guess, a problem for these consumer stocks.
I mean, people will always argue on valuations, right? Sandeep, I remember you've been cautioning, on the markets for a while now in our previous conversations. In fact, I think the middle of November when we had you on, you were saying you wouldn't be surprised if you see another 10% downside from here. And in individual stocks, it's really played out. Beyond the consumer, like when you look at the year as a whole, I mean, the whole hope is on this government capex picking up, right? But beyond that, is there anything that can turn the tide?
What can turn the tide is that if India manages the Trump presidency well. India is one of the few countries which, besides the US and China, is entirely domestic driven. But for the first time, I would say, the way the world is positioned, the US is actually pivoting in a major way. The US has been the consumer of last resort. The growth model, which India did not implement in the 70s and thereafter, was export to the US, be allied to the US. And that has been a very slow and painful path for India to take. Even now, we are primarily a domestic-driven economy. But we are now definitely looking to be more closely connected with the US. And if the US pivots away from being the consumer of the last resort, then there is a growth challenge for the rest of the world, and including India, especially where we are most exposed to, which is in IT services. H-1B visas could be something which the US government can take up. So all these issues, if Trump comes down with a sledgehammer on tariffs or on some policies which make it difficult for our businesses to operate, there could be a correction in the market. There would eventually be a reset, and Indian companies will come out stronger and better. But there would be definitely an impact on the markets.
But just to
one minute, with your permission, Aditya, you tell me. I would respect Victor Schwetz's a great deal. The Macquarie Capital thinker. What does he say about the global, fund movement? There is a point. I mean, dollar cannot go on 108, 109. As well, yields in the US, the US stocks. When does he see the inflection point when the US exceptionalism will stop?
The short answer is in the short term, he does not see that inflection. Okay. The strong becomes stronger is kind of the mindset. Yeah, and that I guess is a problem, right? So the stronger dollar is going to be a broader problem for emerging market fund flows. Okay. Within that context, India has not seen any meaningful fund flows in the past 3 years and 4 years. So is that really going to be a tailwind here for markets for the next 12 months. We don't see that necessarily.
Okay, sorry, Surabhi.
No, so I was actually asking you something on similar lines, that in fact the fact that we've been more domestic driven, doesn't that actually help us and work in our favor in case we get this tariff blow? And while I take your point completely on the US being the consumer of last resort right now, it's doing so well, right? That's why the money is rushing back there. So again, what should we, beyond IT services, from the global arena, what should we be fearful of? I mean, on the flows point that Aditya made, you see any changes there at all?
So a strong US dollar is bad for all equity inflows into emerging markets as an asset class. The other thing that we have to be fearful of is how the geopolitics is shaping up. I've been saying that for almost 2 years now, that actually more than earnings, geopolitics is the driver for a lot of things which are happening, which have been broadly good for India. So if something happens in the neighborhood which puts India under any geopolitical pressure, then that could be something which we need to worry about. Not that I expect it to happen, but we have seen unexpected events happen all through 2024 and before.
So let's talk about what investors should do, right? You spoke about some headwinds. There are 5 of them which you've outlined, which will test the resilience of the domestic liquidity. But you still have some buy ideas. In this rich bazaar, bottom up, you still find 25 buy ideas. Can you talk a little bit about that?
So let me just go through that a little bit, right? So in that report, what we're basically saying is that there are these headwinds for us to kind of work through, as you kind of pointed out. But it's not to say that India as a market, we can't find bottom-up buy ideas. So within our coverage, there are these 20, 25 odd kind of ideas which we still find and we still like, and it's attractive. At a sector level, when I kind of aggregate up where we are a bit more optimistic, it ends up being we're far more optimistic on telecom and IT compared to the benchmark. We're a bit more optimistic on healthcare as a space. We end up being neutral on financials. We end up being meaningfully negative on consumer, right? That's kind of a key underweight here for us. Industrials is about kind of in line. So that's kind of the broad kind of flavor of kind of how we are positioned. We can touch on the specific stocks, but yeah, sector-wise, that's how we are positioned. But a lot of it is also down to what's already in earnings expectations. And the 2-year forward story, is that going to be lifted upward or downward? And that has a big influence on kind of what is mentioned.
Either of you can take this, but would you all prefer mid-caps? Because all the selling is coming by the FIs in the big ones. So even in pharma, for instance, would the preference be towards non-Nifty?
I think the general mindset, Lata, is more just specific and bottom-up rather than a general broad brush of mid-cap, large-cap. But you're completely correct that foreigners, as an example, the banks, that's been the biggest kind of overweight position. And despite the valuation support, there's more selling which is kind of coming through. Absolutely. So it's an interesting dynamic which is at play. But I wouldn't characterize as sell all mid-caps. I think there are quite a few kind of quality ideas within there which we like. Yeah.
Okay.
And to top it off, and this is something you mentioned in the report, there is, apart from the FPI selling, there is VC selling, there is MNC parent selling, there is Indian promoter selling. So just a sheer supply of paper. How much does that concern you folks? And I mean, we've seen this in the past. I don't know if this is the same again, that when you have this amount of paper hitting the market, usually coincides with a bit of a top. So on the market as a whole, what's the market call for 2025? And what about all this additional selling in India?
Yeah, so just on the supply of paper as well, it's clearly in response to the excess liquidity which is there in the market, right? Just to contextualize this again, domestic liquidity, even if you follow the NSE pulse, I mean, when you look at DII plus individuals, it's about $70 billion in this year, right? Which is a fairly large number. That's only the first 10, 11 months of the year. So there is more there with that. It's not been foreign. Now, when you think about the primary and secondary kind of supply, it's still behind this, right? So to the extent that this level of domestic liquidity holds, this pace of kind of primary and secondary activity can actually be absorbed, right? Now, having said that, I think the broader things which we think about is, in fact, just 2 points. One is that the average ticket size of these transactions down 75% in the past, say, 2 years. That, I think, is a red herring on its own. And point 2 is that only about, say, 5 or 10% of these proceeds is going to fund growth capex.
Absolutely. It's all people
Everything
cashing
else
out.
is luxury property, right? Or something else somewhere. That is, again, a red herring. But I think the broader dynamic is that I think it's in response to these deep liquidity dynamics which have manifested itself. And as long as that holds, we could see a repeat of this next year as well, right?
It's all boiling down to domestic liquidity then.
Yeah.
Yes. So just to add to what he just mentioned, I would welcome the widening of the market in terms of the IPOs which are coming through. There are some good businesses which were not listed, which have been listed,
Yes.
and they will get, we'll see further additions. We also saw a process when the GDRs and ADRs were coming that we were exporting our markets out. That's not happening. So structurally, that's a good thing. What is, as he said, pointed out, is a worry figure. And someone I know has said that at the beginning of the bull market, the investors have the cash and the promoters have the vision. And now, at the end of the bull market, the promoters have the cash and the investors are left with the vision. So in the end, I think the way the IPO markets are happening with everyone cashing out, it's clearly that valuations are very rich and very and a good point to cash out. And therefore, this can continue as the liquidity flows can indicate. But in the end, it only points down to the underlying theme, which we've been saying for some time now, which the markets are expensive. Earnings has been slowing down. A lot needs to unfold in the first 2 months of next year. We need to see where the Trump presidency is headed. We need to see where India can position itself over the next 2 to 5 years before we see stabilization of the markets and valuations and an entry point emerge.
Okay, you have given us one big cue. Wait for the promoters to stop selling. That is an indication the market is not overvalued.
But has so many IPO KYCs. She's our IPO expert here. She'll tell us about the kind of money that's just
I have
right?
Rima's question for you. IT stocks, after Accenture told us, would it be a buy?
And especially when you said that IT is at risk because of global factors, but as a house, you are bullish on IT.
So I think it's should be framed in the context of what's already in earnings expectations, right? And when you see IT sector, there has been a downdraft of earnings in the past, say 6 months, right? And so at least our analyst is far more optimistic about demand. And the call is that you're going to see revenue beat on the upside, plus there is marginal expansion. So he's selectively optimistic again on the IT space. It's not like we're going to buy the entire sector and buy all the large caps. So we do like a few mid caps, like the TCS, HCL, these type of things, persistent in the mid caps. So yeah, but that's one area where we are a bit more optimistic relative to where expectations are at.
Okay, so that's IT. So let's recap. We've taken all the headwinds that you've played out on board. Apart from IT, where do you see relative safety? Or when you say you have to be buying when eventually there's a correction, time or price correction. So
I think banks are a good place.
Okay.
Banks' valuations are not as demanding. I think the other thing which anyone who's been long enough in the market realizes is that the banking sector was the Achilles heel of India. In the last 10 years, there's been significant positive structural improvement. In addition to the fact that the fisc of the center has definitely improved. In fact, I would think that other than that, people give a lot of importance to the China plus one factor, but these are the domestic factors, whether it's the Indian fisc, whether it's the banking sector, and also the relative political stability that India has seen, and therefore consistent policy direction in a broad sense, both for economics and for the foreign policy. All that has contributed to India emerging as an important pole in the emerging market universe. So that is something which I would think more than just China plus one or anything like that, and which is why even if there is some growth slowdown which is happening in the market, I would think that if these factors continue, India's markets may see corrections, but that would not mean that they would be very deep.
Okay, but would you expect the earnings downgrades to continue for the next 2 quarters, and is it priced in? He spoke about growth slowdown.
No, so I think that's one thing which we would definitely want to continue to caution, that in the past 2 quarters, we've finally started seeing more misses than beats in estimates. The shape of the earnings graph for India has been a big support factor over the past 2 years, right, where our estimates have kept being revised upward with that markets were supported. I think that has to be reset. There has to be a reset, right? So expectations remain still far too optimistic. When you look at the kind of 2-year kind of growth outlook, it's still about 15% EPS growth, which is, I think, disconnected from kind of what we are seeing, at least on the bottom up.
And what should it be reset to, from 15%?
I think if it would be, even if we get 10 or 12, I think that would be a good outcome.
And is that
but are you
priced in?
expecting that for FY26?
For FY26, yeah. So we are at between 10 to 12%. But even that, I think there is an element of optimism in those estimates already baked in. When I look at kind of what's happening on a quarterly basis and look at the trend there, it's not consistent with that outlook. So there is hope to get to that 10 to 12%.
No.
But it has the risk. There are downside risks to that.
Another year of single-digit earnings growth can't be ruled out.
We would not rule that out. But then it's always been about a market where we cut, roll forward, and keep the faith in the 2-year forward story, right? So the narrative about the growth outlook also matters.
Okay.
But for FY26, yeah, we are more in the camp of more
But how do you hold the flag of, the India story with a high single-digit kind of earnings growth for the next 2 years?
So we are more in the camp that as a market, we do pull back.
Yeah.
There is a reset which is required. The how much is clearly a function of domestic liquidity. Yeah. So why we are where we are as a market, a lot of it as a multiple as well, is driven by this domestic liquidity dynamics, right? So to the extent that the resilience of this liquidity is tested, then then the downside is probably going to be a bit more, a bit more profound.
Sandeep, you want to add a range to that? Last time you told us maybe 10%. Widely, wide range, perhaps for calendar year 25?
So I'm not in the camp that domestic liquidity can always be a savior. It can actually cushion the impact of earnings disappointment. So I would think that another 10% correction in the market in the first half of the year, depending upon what happens in terms of what Trump does. Actually, as I said in the very beginning, it actually is externally driven for a change in India, the market, rather than internally driven. But it would be something which if India sees a growth rebound coming through, which it can and which it should, that couldn't be easily be cushioned with domestic liquidity. So we have to see.
Your choice of stocks is all very much defensive. Look at that. Sun Pharma, Lupin, all the pharma stocks. And then you have TCS, HCL Tech, Birla Soft, all the tech stocks. Tech and pharma, classic defensives. You're not betting on the capex cycle. You're not betting on the L&T types. Don't see it on the anvil.
No, look, I think, again, it's got to be framed in the context of what's already in expectations, right? So industrials, when you look at what's in earnings expectations, there is a lot of growth which is already built into the L&T estimates, right? And so at best, we're meeting numbers. There is confidence on that theme. And I think this first half blip which we saw, we still think that the first half government capex kind of slowdown was more a blip. So we're still behind the theme in full. But I think it's more that bottom-up list again is more in terms of what's already in expectations and where there is a bit of upside in the multiple. L&T does feature in that list of kind of or within our top, say, 15 odd stocks in there. And that's more, but the proxy again is more about the confidence of the theme than it being about earnings being revised upward.
Yeah, fair enough. There's power grid. So you do have capex stocks. Yeah, sorry.
Okay, so just to try and be optimistic, though we have to be realists, and you've laid out all the concerns. But if one to just talk about the optimistic upside, the upside risks to a lot of the estimates you've sort of laid out, what could be the upside risk that perhaps stops this relentless FPI selling for one?
So I think 2025 is election light year. We just have Delhi in the beginning of next year, and then we have Bihar coming at the other end. I don't think it can throw up very negative surprises. People already have expectations on both elections. And then we have rest of the year to keep batting and hitting some 4s and 6s, as I would think. I think if Trump comes across and can not be so negative for India and for the rest of the world, he's a deal maker, and I would trust his instincts that he would actually be ready to make a deal with whoever decides to do that. We would have stability on the broad global macro. And if that happens, India's underlying growth story will re-emerge very quickly. By the second half of the year, most of it will be visible, and the markets will start. Even before the earnings come through, once we have stability on these fronts, the market can easily rally from the second half. So it's actually, my view is that the first quarter is very important. After that, we will know where we stand.
And in the emerging markets, where is it that Macquarie has the highest conviction in the first half and in
India.
India?
Yes.
Despite the FI sell.
At last.
But we have Macquarie thinks that the US, India and Japan, and as you said, in emerging markets, it's India.
It's India.
So these are the countries which are have the most degrees of freedom to deal with anything that's thrown at them.
Okay, let me push my luck then. Top 3 conviction calls in India.
I'm going to refrain from the stock ideas. That's there on the reports. It's probably flashing on the screen. But yeah, I mean, as a market, and to start towards Sandeep saying, I think the characterization is really about 2 steps forward, 1 step back. I think now the next 6-12 months about the 1 step back before you go 2 steps forward. Within that dynamic, our mindset is defensive. In that defensive construct, our positioning is in IT, pharma, and financials.
Okay.
IT, pharma, and financials. And hoping for a better second half of 2025. That's where some of the positives maybe.
Maybe second quarter.
Maybe second quarter itself, so it's not that bad. Yes.
Good.
Nice.
So if we push you hard enough, we get an advancement. Thank you very much.
Thank you, gentlemen, and wish you a very, very happy 2025 to you, your teams, and of course, all your near India ones.
Happy holidays.
Happy holidays.
Thank you.
Thank you. Thank you very much for joining in. So now let's...